Investing in long-term government bonds is like choosing a well-worn path through the financial wilderness. It's not thrilling, but there's comfort in its familiarity. Pros of investing in long-term government bonds. Stability and predictability. There's a reassuring steadiness to government bonds. You know exactly what you're going to get, and when. A predictable stream of interest payments over time, and the return of your principal on the bond's maturity date. Low default risk. The U.S. government backing these bonds means you've got the full faith and credit of one of the largest economies behind your investment. The risk of default is so low, it's almost like worrying whether the sun will rise tomorrow. Inflation-protected variants, TIPS, or Treasury inflation-protected securities, offer some cover against the eroding effects of inflation. So if you're up in Portland and you see the cost of living climbing, at least a portion of your investment is adjusting with the tide. Passive income. For retirees or anyone needing a steady income stream, those regular interest payments are like the steady rain in the Pacific Northwest, always coming, persistent, and reliable. Tax advantages. Interest from federal government bonds is often exempt from state and local taxes. That's a sweet little perk, especially in states with higher tax rates. Cons of investing in long-term government bonds. Low return potential. Bonds are the tortoise in the race, not the hare. If you're looking for more aggressive growth, bonds are going to be more disappointing than a sunny day forecast turning to downpour. Interest rate risk. Long-term bonds can be sensitive to interest rate changes. If rates go up after you've bought your bond, you could be stuck with a lower-yielding investment, while newer bonds are offering higher returns. Opportunity cost. Tying your money up in a long-term bond means you might miss out on other investment opportunities. Like a foodie in Portland passing up the newest food cart because they're already full. It might be a prudent choice, but it means missing out on potential delights. Inflation risk. While TIPS can provide some protection, typical bonds don't have anything to up their payouts in line with inflation. If inflation rates soar, your bond's purchasing power drops like an overcooked voodoo donut. Still sweet, but not as satisfying. Liquidity concerns. Holding a long-term bond means a long-term commitment, unless you're willing to sell it on the secondary market, which can come with its own set of issues like less favorable pricing. So there you have it, a rundown of the pros and cons of investing in long-term government bonds. Much like the Portland Trail Blazers might consider the long game when drafting a player. Weighing these factors against your financial goals and timeline is crucial before making the play.